Welcome to Theo Video for January 4th, 2016. This is Don Kaufman. You are in 2016. Welcome to it. It is volatile. I guess the only thing to really tell you about today's trade is don't get caught in the crossfire, because that's all that we saw inside of today's trade. So the S&P is an overnight trade. I woke up this morning pretty much in the middle of the night, and everybody wakes up, they go to the bathroom, some people just go right back to bed. No, Don, he checks the futures. Okay, so when you wake up, it's 3-4 o'clock in the morning, not because a kid's screaming, got to go to the bathroom, come back, I check the futures. Of course I'm awake. Why? Because the futures are down like over 35 points, pretty much right at the open. They're down 39 handles at the open today. So what happens during the trading day, for those of you who didn't watch, we're down big at portions today. Okay, towards the end of the trading day, we have a rip-roaring move back to the upside. So go to like a 1-minute clean. I mean, it doesn't get much crazier than this. That, ladies and gentlemen, is the way to kick off a year. I'm excited about it. Just, again, a wild trading day over here, and a few points I want to make and a few possible like trade setups over here. Number one. Last week, okay, New Year's Day, I talked about 4 individual stocks. Facebook, okay, down 2.3% today. Netflix, down almost 4% today. Google, down 2.4% today. Amazon, down almost 6% today. Those are the 4 stocks I pointed out. And I kept talking about the divergence kind of in the force, if you will. It's those 4 stocks. If we're going to get volatile, those are the 4 stocks that are actually going to drive volatility. And that is precisely what we saw today. And I'm not here to pat myself on the back. I'm here to tell you, like, that's the kind of divergences and convergences that you want to look for in a marketplace. So now, as you move forward in the week, you're thinking to yourself, we're going to see more volatility? Like, was that it, Don? Are we going to see more? Okay, a few things that have made me a little more edgy than I typically would be. So you got a day where the S&P's finished down 27. Big deal. We've all seen it before. It has been, though, quite some time since we've seen financials participate to the downside. Now, the financials, yeah, they rallied back up. This is just a kind of an intraday of financials over here. But to give you a little bit more perspective, the financials, they just got gapped in the ugliest possible manner down today. We're talking in the 23 range in the financials. One of the most important things, okay, moving through the next 2 to 3 trading days, I'm not even so inclined to see what happens in Amazon, Google, Netflix, and Facebook. I'm more inclined to see how it plays out in financials. Okay, again, the financials last year didn't fare very well, had a down year, okay, kicking off the year over here. Got to realize the financials, they're the second largest market cap to the S&P, and they often, okay, are right on the forefront of much larger volatility moves. It's too early right now for me to make an assessment if volatility kind of persists over here. All the hallmark signs of volatility are there right now. Okay, we just need another day or two, and the reason we need that is you just had the S&Ps. Okay, they haven't been closed like the last 10 trading days, but they've been pretty dead. And if you take a look, all right, and I'll kind of zoom in over here, and I'm looking at the spiders. If you take a look, just the last couple of trading sessions, just minimal volume, right? Let me zoom in very tightly here. You've got really minimal volume because it's against the holiday season. It's that unspoken, we're going to take time off and not tell anybody about it kind of thing. But we left the trading year, okay, on really December 18th of 2015. That was that last real heavy trading day. But we left the trading year in extreme volatility, and we just picked up right where we left off. It's my belief right now, again, it's got all the hallmarks of a much more significant kind of volatility expansion over here. Nevertheless, way too early to try to make those assessments. One of the things that I look at, okay, some people know, like, hey, I look at bonds and so forth. The bonds, they didn't participate today. And I'm not talking about like participate to the upside. You expect bonds to rally. The bonds, the volume didn't really do it. The bonds, like, we're whatever, we'll get around to it. So we haven't even seen like the bond market say like, all right, this is it. This is going to be a much bigger move. The bonds, they haven't even gotten involved yet. So if we're going to see some volatility, you're going to have to see those bonds really start to be rocking. Okay, I want to see some volume behind them, and I didn't see it today. The other thing that I did not see today that I really want to see come out of the woodwork here, I want to see the volatility futures flip. I want to see these 16-day vol futures. And I know this is a little difficult to look at, okay, but I'll kind of draw it on the screen over here. What we're looking at is we're looking right here at these 16-day vol futures, okay, versus the 44-day vol futures. Now, forget everything else in here. Forget them because these are weeklies. They don't even trade any volume, okay? But if you take a look at this, you'll see that the 16-day vol futures are actually above the 44-day vol futures. That's the beginning of it's a volatility inversion. That means there's more risk right now than there is 44 days from now. So again, kind of neither here nor there. But as you go further out in time, here's the point. You go further out in time, and the volatility skew is actually flat. So again, if you're looking at this as a trader, you're like, what the heck does that mean? It's pretty much the volatility skew is flat. If volatility were much higher in the front month, it means risk is big right now and will abate in the future. But right now, the vol skew is flat, which gives us, we are literally walking the tightrope right now inside of the marketplace. And anybody that you're going to look for direction, they have no clue whatsoever. And the reason I'm pretty confident in saying that nobody has a clue is because the S&P futures, okay, on the first trading day of the year, okay, these S&P futures, they did almost 2 million contracts in the first trading day of the year. That screams one thing. It means nobody knows nothing. And I got 2.2 million contracts say they don't know nothing. That's why it was crossfire in terms of trade today. Okay. Some of the trade setups you want to look for. Okay. Apple redeemed itself quite nicely today. Much to my chagrin. I'm short Apple at 102. I was like, yeah, it's going to 100. I still kind of think Apple very soon is going to be flirting with the 100 mark. But if you look under option statistics, Apple's volatility percentile isn't that elevated. Nevertheless, if there's going to be a nice bounce in markets, I actually think Apple might be the way to trade the bounce over here. Look for bullish types of spreads in Apple, the kind of stuff that I'm, really going to be talking about in the chat room, risk a buck to make a buck kind of stuff in Apple. Again, Apple looking for a bounce. You can use 18-day options. You can use 25-day options. These are going to be really, really low risk trades. I'm just going out there. Just want to nibble right now. I don't want to get crazy. Okay. When I say risk a buck to make a buck, legitimately what I kind of mean is to do a $2 wide spread where you risk about $1 to make about $1. Okay. And you guys, listen, you play around with this stuff and you'll come up with a spread that works just for you. Okay, got to make sure you got the right spread for you, the right risk profile. Here's a $3 wide spread for about $1.50. So you're risking $1.50 to be able to make $1.50. You close these things when you're up 60 to 70%. I'll be talking about this much more extensively tomorrow in the Theo Trade Room. Again, today was kind of the inaugural day for Theo Trade. We kicked off the chat room. If you could not join us in the chat room, that's all right. We know we have now, well north of 1,000 beta users. If you want to anybody that wants to check out Theo Trade, just shoot us an email. support@theotrade.com. support@theotrade.com. We'll actually send you guys an invitation to be beta testers over here the entire month of January. We're going to be beta testing. But I do want to show inside of the chat room, which is active right now. So here's the chat room. Once you are a member and can access here, and again, you're a member, but it's beta, so there's no cost. You go to the archives, and you can actually check out the chat room archives. So if you're watching this, but you're kind of curious, like, what did we do today in the chat room? Here's, the January chat archive. And we've now started posting those archives. So they're there. You kind of can watch all of it. It's instantaneous. We also did a coaching session today, the first of its kind. All right, these coaching sessions, they're not just going to go on during the trading day. We will also be doing some evening coaching sessions. And Okay, again, you can view all the archives from those coaching sessions. Last but definitely not least, we're going to have classes. Towards the end of January, TheoTrade's going to kick off some of its first classes. It's on. Oh man, we are going to do all of it at one price. We've got a number of different traders that are going to be joining us. We're not hiring instructors here at TheoTrade. Got a bunch of traders that I've worked with in years past. We're really looking forward to bringing them aboard here at TheoTrade. So join us kind of each and every day. These videos will be coming out to you every night. These will be free forever. Okay, TheoTrade, it's what we do. It's all about trading. Thanks a lot, everybody, for joining us here at TheoTrade in a kind of inaugural day. Welcome to 2016 and welcome to Volatility.